Welcome back to another episode of Profitless on Purpose, the nonprofit accounting podcast. I'm one of your hosts, AJ Wheeler, and with me, as always, is Mark Palardy.
Hey, everyone.
Got a great show. A couple articles for you. The first one is Grants for Nonprofits and Charities, Save Your Sanity, the ins and outs and everything we know about applying for grants, how you should apply for them, when you should apply for them, the pitfalls of applying for them. If you're a new nonprofit, listen up. Some good nuggets in there we can talk about. Our second article is our heady article of the week, or our from the Social Stanford Review, SSIR, and that is Bridging Partisan Divide. So this is a kind of almost like a book review on a book by a woman who shows you how to bridge the gap and have difficult conversations with somebody that maybe is oppositely opposed to something. So we kind of redirect that and talk about how your nonprofit can use this to, bridge the divide if you have a contentious kind of proposal, or if you have two people butting heads in the organization. What are some of the kind of tips and tricks and conflict resolution styles that you can use? We kind of break that down and let you know some tips and tricks to deal with that. And then our last article is capital campaigns are back. The pandemic's over. People want to build stuff. Capital campaigns are back. We give our tips and kind of pitfalls of capital campaigns, what to look out for, and what definitely to do if you're getting into one of them, and what to expect. So we'll talk about all that more. And then our topic of the week is how detailed does your nonprofit need to be with recording your in-kind donations and the support behind it? What an in-kind donation policy looks like. Well, what is even an in-kind donation? We'll talk about all that and more on this week's episode. But Mark, you have our first article. Take it away.
You bet. Thanks, AJ. This one's from Nonprofit Hub by Katie Appold. It's called Grants for Nonprofits Are Attractive but a Complicated Pursuit. And this one is some ground that we've covered before on the podcast. But basically what we're looking at here is how, in the article, they're talking a lot about startup nonprofits and how difficult it can be at the beginning to get in there and get grants. And there are some tips in here for kind of making yourself grant ready, right? Some statistics to start us off: roughly 1/3 of foundations receive less than 50 proposals per year, and about 35% of foundations award half of the appeals received. So that's great if we think about it from a nonprofit perspective. It's not like going for a job interview where they're just giving the job to one person. It's like 35% are awarding half of the people who apply, they're awarding them money. So it doesn't hurt at all to get in there and start applying for money and getting your foot in the door. So, but getting in there, there's a few steps along the way before you start applying for grants to know that, first off, most grants are only going to be awarded to nonprofits that have been around for a little bit. 3 years tends to be kind of the base point that you often hear with grantors. And they're wanting to look for a 501c3. So if you're not a 501c3 and you are interested in grant funding, it's probably a good idea to get that paperwork moving and get it going. And then you can also look at partnering with like-minded organizations who are already 501c3s and kind of append onto their 501c3 status in order to apply for grants. It's a little bit trickier, but it seems to be one of the necessary steps. So just some quick dashes of things that she suggests. The fiscal sponsor, that's what I was just talking about, of finding a like-minded nonprofit who is into your mission, who agrees with what you're doing and would be willing to kind of sponsor you until your 501c3 comes through. Earning your income as opposed to just getting grants, finding a way to bring in the income. As AJ and I would remind you over and over again, make sure it's something related to your mission so that you're not subject to UBIT, especially at the beginning. When you're trying to get your 501c3, you don't want to get convoluted and confused as to what your actual mission is and how you're bringing money in. The other way is to take some risk, which, if you're a startup, you're always going to be taking some risk, but, not getting donations and trying to fund it yourself to be reimbursed later is a risk, but, it's something you could do. And then their fourth suggestion was start as a volunteer organization. Well, I think that's a non-starter. I think everybody starts as a volunteer organization. I don't know that anybody's getting paid out the gate at a nonprofit. I know nonprofits that have been around for 5+ years and most people are still volunteers. So So these are some good tips, but basically if you're a startup, have realistic expectations about getting grant funding and know that you're going to need some of these tools in place and probably 3 years under your belt before you're really starting to see some feedback. But have a pipeline ready, right? Have processes in place so that when you hit that 3-year mark and you have your 501c3, you can really hit the ground running. AJ, what are your thoughts on this?
Yeah, I think the article brings up some good points, but it doesn't give a lot of detail behind it. I think first, starting with the fiscal sponsorship, if you find like a complementary or an adjacent nonprofit to what you're offering, say you're like a daycare, a nonprofit daycare center or something like that, partnering with like, say, a Head Start program organization or something like that, will give you a lot more credence under that. They can almost like fit you in as one of their side projects. But what they don't talk about in the article is when you're a fiscal sponsor like that, you're usually giving up some kind of administrative fee to the organization that is your fiscal sponsor. And what that does is it covers them, like tracking your funds and, your expenses associated, especially if you have a grant or some kind of program that you're operating. They're going to have to charge you an administrative fee of, probably 10%. If they're nice, like 5 to 7%. But, just be aware that it costs that other 501c3 administrative time to, process and report back to you on, money brought in, money going out. They're doing the accounting and kind of like the organizational things that normally if you were a full operating nonprofit, you would be doing on your own and have some kind of support for. So realize that that under a fiscal sponsorship like that, also too, for that, sponsoring organization, their 990 return can get more complicated because they kind of have to extract or, make aware that you're a fiscal sponsor under them. So, and I've seen organizations after they even get their 501c3, they're still using the fiscal sponsor because, it can be time consuming to get your own grant, to get your own bank account, to get your own, like staff to do those administrative functions. So I've seen organizations that have a fiscal sponsorship last for years. And it can be, to be quite honest, it can strain relationships in that area because your not small nonprofit is growing and probably has more needs, and probably the that administrative fee that they're taking probably exceeds what their actual output of funds are to manage your 501c3 after it's done. And say you're adding grants or programs or something like that, it can be time consuming. So I think understanding that I think is vital, and finding an organization that's, like in your same lane. Oftentimes, they can see you as a threat to their grant. There's only a certain amount of grant pools out there, or money pools and donation pools in your area. It can be hard to find somebody that's going to be, sometimes it can be hard to find that if they view you as competition or another nonprofit that's trying to do the same thing. So just keep that in mind when looking for a fiscal sponsor. And I think the other part there is earning income. The author kind of alludes that, that if you're offering sales and membership and programmatic fees, that you lose the tax deductibility. I would say, really understand, and Mark alluded to this, but really understand your nonprofit, the reason for becoming a nonprofit, and build your programs and memberships around that. And, often I've seen nonprofits call a membership, but really it's a donation. The devil's in the details there. If somebody is receiving something for their membership, then the tax deductibility of that quote unquote membership is different than if they receive nothing, but they're a member, and they just get to call themselves a member of the organization, but they're not receiving anything of consummate value in return. Then it would act the same way as a donation. They just happen to call it a membership. So be careful with labeling. And I think, you always want to engage with somebody that understands the ins and outs of these, as opposed to just kind of striking off on your own and not understanding the ramifications of, even a title like membership, where it really should be called a donation. So I think keeping those things in mind. And I think the other part that the article doesn't get into is how much time it takes to submit these grant proposals. Often, if you look, especially if it's from like a federal funding source, you're going to be spending a lot of time putting together the financial portion, the narrative portion of what you want to do with that money and supporting how that money's used, as well as you're going to have to give them financial statements of some kind, and so if you're a startup, I think that's really, not only are you going to have to give them financial statements, you need to be in a good financial situation. So if you're a startup nonprofit, very difficult to present, your nonprofit with positive net assets. That takes, some years of positive operating revenue positive net revenue to be able to build that up. You essentially have to have more assets than liabilities. And a lot of times for a small nonprofit starting, heck, one payroll run or, an insurance payment, at the end of the year can wreck your net assets, because you just have such a small pool of assets to work with that it tends to make your nonprofit look bad on paper or financially unstable on paper, which, to be completely honest, as a startup might be the case. So the reason why, especially local governments and grant writers from foundations are looking for a stable place to have their money perform, the grant money that they're giving away, help the community in the most efficient way. And if you're a small nonprofit, often they see that as a risky bet, for the most part.
Yeah, I agree, AJ. It's that proven track record that you don't have yet, right? And they don't want to just be, they're fiscally responsible for their foundation or their whatever organization, whatever money is being granted as well. So they can't just give that away to an organization that may not be around in a year, that may not have the chops to show that they can do it. The fiscal sponsor does get a bit complicated. I think AJ brings up a great point, right? Once you start getting into, let's say you did get a grant while you were under fiscal sponsorship, grants, once you have one, it's easier to get that grant the next year, because the underwriting, if you will, of that grant process is already sort of done. So they can just use the updated numbers and maybe updated program information. But if you're having to reapply for that grant from scratch under your own organization, you're taking the risk again that you're not going to get that because you're no longer under fiscal sponsorship. One other thing that this brought to mind, which I think they alluded to in this, is that donations, if you're receiving donations before you get your 501c3, right, they're potentially not tax deductible. But the interesting rule that I've had some experience with is that if you start taking donations and you've applied for your 501c3, if the 501c3 subsequently gets approved, it goes back to the day you filed your application. So that's a bit of risk for your donors as well, because if you have people who are true believers in your cause and you think you'll get your 501c3, they can be donating and then deducting it from the taxes. If for some reason that doesn't come to pass, then their donations are not tax deductible and they just gave out of the charity of their own hearts. So anyway, just something to keep in mind, for all you new startup nonprofits out there. So AJ, I think you got our second article for us.
Yeah. Actually, that first article reminded me of, those new job seekers. You need experience. You kind of need a grant under your belt, but how do you get that first experience for that grant? That first grant.
Completely. Yeah.
So it can be difficult. So our deep thinker thought, or our deep thinker article of the week, is from our favorite Stanford Social Innovation Review, SSIR, as it goes for short. And it's called Bridging Partisan Divides. So it talks about, it's essentially a book review of I Never Thought of It That Way by Monica Guzman. And it talks about her kind of navigating tough conversations between the partisan divide. If you've been anywhere close to the news or social media over the last 10 years, probably you'll see that it's become more divisive on either side of the aisle regarding certain topics in the stratosphere of, especially in nonprofits that are usually much more liberal leaning, but then there's also those more conservative leaning organizations, and trying to bridge the divide is what's happening here. So they lay out kind of like, or Guzman lays out in her book kind of her approach to bridging this divide. And so I won't get into all the nitty gritty detail. I want to give kind of an overview and then kind of relate it back to how you can use this in your nonprofit if you have staff that are, have some kind of different thoughts on political leanings, although I still remain, politics would probably stay out of the workplace, but you can have, some water cooler talk or different engagements in your nonprofit that may bring to the surface some kind of political divide or even like an ideological divide in everyday, conversations. And this is kind of like a guide on how to navigate two people that are kind of butting heads ideologically. So they start with built-in curiosity rather than approaching conversations agnostically. You want to understand the differences in what's being said. So this would be, I guess a rule for any kind of conflict resolution. If if you have a proposal for your nonprofit and two people are vehemently either for or against it, how you can get to kind of a common ground on it. So keep our minds open so they don't shrink. And then what they're talking about is asking questions, a curiosity starter kit, and really engaging with that person and making a good faith effort to understand where they're coming from and turning assumptions into questions instead of just assuming they feel one way, really digging in and asking them questions and listening to their answers to be able to, understand where they're coming from and understand their position on this is the way to do it. And so, don't come in with a preconceived notion of stereotypes and other forms of cognitive shorthand that causes them to prejudice the person that is trying to present their argument or their opposition or support for something, but really break down and try to ask meaningful questions that uncover and, explore where they're coming from is the first part of that. And then using a transaction loop, where you're trying to steward the conversation into a more positive direction. And it includes listening for repetitive language. If you feel yourself or the person you're speaking with stuck in rehearsing the same points and boosting both of kind of your points, to rather redirect that and try to move forward in a way that lets everybody come to an understanding of maybe a point where you need to agree to disagree. So I think there's some really good points here. I would recommend, we'll link the article and of course in the description, or you can, search it, Bridging Partisan Divides. I think it's worth reading because I think it takes a pretty good approach on how to approach difficult conversations, and it doesn't necessarily need to be this partisan divide that they're talking about. I really took it as kind of like a playbook for when you have this conflict where people really dig in their heels. And I've seen that happen in organizations around, say, a proposed new project where somebody is really gung-ho about it, but maybe doesn't have the buy-in of everybody in there. And it can, be hurt feelings and dig in on their side of the line here. And then, or it can be like the implementation of policies and procedures in the organization where somebody is vehemently against something that's being proposed, and trying to uncover the source of why they're digging in and understanding their side and not just pushing forward with something, I think is vital. And I think, I've said it on the podcast before, I think we do more together than we do separately. And unfortunately, with social media and kind of like a winner takes all stake in one side or the other, really blocks off almost half of the people you might have either donations from or support for your cause. I think working together and opening your side to the other side of the aisle, so to say, or to the other side of who's opposing you can do more with that than, I guess, digging in your heels. And it has to be the way that I see it. So Mark, I'd love your take on this and maybe get your ideas on the article and what they presented there.
Yeah, I think the author brings up some great points. And, she kind of starts off with the notion, how do we talk to each other if we always think that the other side is broken, right? And if you take this into the realm of politics, it doesn't matter what side of the political spectrum you're on. If your mindset is always, boy, that other side, they're such idiots. They have no idea what they're talking about. I cannot believe somebody would hold that way of thinking. If you go into it with that kind of attitude, you're never going to get anywhere, right? You're going to just butt heads and not come to consensus. And I think that's a lot of what this article is driving at is, coming to reasonable consensus buildings, trying to not immediately view your opposing person as, an idiot or, they are X fill in the blank. So they're going to obviously treat it this way, and actually look for ways to have difficult conversations without making the other person wrong, right? Try to ask questions and understand other people's point of view without making them wrong. I've had some training myself in NVC, nonviolent communication, which sounds a little harsh, but it's a way of actually communicating with people where you don't speak to them in a manner that is violent, right? Where you're not being accusatory. And, this article doesn't necessarily bring that up, but it reminded me a lot of it. One of the main tools that I've learned in NVC is that, especially if you're feeling attacked or you're feeling like your opinion or your point of view is being attacked, this can work in all sorts of ways. You don't say, you made me feel this way, or you did this. It's always, what I'm hearing is, or what I'm feeling, or my interpretation of that is, so that you're not accusing another person and not trying to get in their head and assume bad intent. Instead, you're kind of reflecting it back on yourself. Well, when you're saying that, this is what I'm hearing. Did I get that right? And that's a way to kind of diffuse conversations, because the other person will often go, no, that's not what I meant at all. And then you're not basing your conversation off of bad assumptions, which then can ratchet up into, we already know what it can ratchet up to. We don't need to go into that. So anyway, I think this article offers some great tips, and AJ, like AJ said, we'll link it in the notes. But I think, if you have difficult conversations to have, whether they're nonprofit based or whether they're just life based, it's a good idea to not come at it, A, thinking that the other person is an idiot, and B, coming from an accusatory stance. So I think that's where I come from it.
Yeah. And I'm glad you brought it up, approaching a conversation that's or reaching a point where it's, combative, I guess, and really, once somebody's, I guess, in a conversation is presented with a combative argument or, an inflammatory kind of responses, it creates a fight or flight kind of response naturally, and so you don't want somebody to flee, and you also don't want to start a fight with it, because then nothing gets resolved and essentially you're just arguing. And I think, the best way around that is to really try to understand that other person's point of view, asking poignant questions so that they feel heard, and not just, you're continuing to spout talking points at them or something like that. And really, especially in interpersonal conversations, you really, want to provide that olive branch and that chance for that person to really explain where they're coming from, and forming that in the form of probing questions and really trying to get to the root of what somebody's saying is really vital to what conflict resolution is, and being non-combative about it, I think, is a really good point, Mark. And I think, with your experience in that training, I think really hits it home that, we need to be nicer to each other and ask more questions instead of just assuming everybody else that holds a opposite belief are just idiots, But Mark, on a lighter note, I think you have another article for us that's a little less divisive, maybe, or combative. So why don't you?
You bet. But with that all being said, AJ, I would say that sometimes people are just idiots. So just realize that too. And there's nothing you can do about that.
It's true. Yeah. Sometimes we just have to agree to disagree,
Oh, man. How many times have I heard that phrase and I just roll my eyes? Yeah, we both agree you're an idiot. No, sorry. Now I've scaled back from what I said entirely. So,
we might need to revisit that.
I know. I just undid all the work we did. Anyway, so for our next article, this one, hey, get out the party streamers, because capital campaigns are back, baby. This one's from Philanthropy Daily. It's from Dan Folta. Capital campaigns are back. Make sure your next campaign is a huge success. So this article basically talks about how, as we come out of the pandemic and we're starting to move into quote unquote normal kind of business again, capital campaigns are starting to pop up, and they're starting to really especially in the educational sphere. This is the example he uses, but they're starting to almost make up for lost times, where some of the capital campaigns that are rolling out are bigger than they've ever been because, there's cash on the table, the economy, inflation notwithstanding, but there's people at work and there's a lot of people with a lot of money. So capital campaigns are starting to really rev up. And this article is just kind of trying to point out that we need to be well positioned for that, and look for, the right opportunities. But some things that you as a nonprofit stakeholder have to consider is, is it the right time for a campaign for your organization? Do you have the right people in place? Do you have the right targeted audience? Do you have the right project that you're trying to get these capital campaigns from? So first, they would suggest that once you kind of have the basic understanding that this might be something you want to do, that's where you would do a feasibility study and have all the stakeholders kind of determine together if this is something they can do. We're talking donors, board members, employees, people who are going to be running the capital campaign, right? And start looking at all of the different aspects that it takes to do a capital campaign, because it is time and energy intensive. And having gone through a few of these, the other piece that you have to realize is that it may in fact cannibalize some of your other donations, right? Some people who normally give to your general fund once a year might say, well, I gave to the capital campaign. That doesn't mean that your general fund is needing less money, right? It just means that people are diverting their funds elsewhere, which can be problematic, right? So looking at another tip is to have bottom-up planning, so look at all levels of the organization. And, as you cast the vision, you let other people tell you, let them come to you and say, this is the problem I see, or this is where we're going to run into some issues, because you might be looking at it from a 30,000 foot level, but people on the ground often can see problems before you can. And just know that it's going to take some determination. It's going to really take digging your heels in and probably long working hours and a lot of glad handing to get a capital campaign done. I mean, it's completely doable, but is it for your organization? If you don't have the energy and the fire behind it, capital campaigns can fail as well. AJ, some of your thoughts?
Yeah, I think they linked to a different article in here about a feasibility study, but make no mistake, those feasibility studies can be costly. So, one of the outcomes of that feasibility study may be that it's not feasible for you to, raise this type of money to build the thing. So just realize that even before you break ground or have a set of engineering plans in your hand, or any of the things that are, come with that capital building, that you're going out for the capital campaign, you're going to have to spend money. And so a lot of nonprofits naively go into this thinking, well, we can get this done. A feasibility study like this is, it's just a bump in the road or a box that we need to check off to get this done. But realize that these feasibility studies are costly, and the result of that feasibility study may be that your organization can't support something like this. And what it takes into account is what it takes to get this capital campaign done. And I would say, especially for smaller nonprofits, it's a lot of work. A capital campaign, I can't underscore how much work it takes to get these capital campaigns up and running, funded. It's a lot, like Mark said, it's a lot of glad handing. It's a lot of speaking to people. It's a lot of, reiterating what you're using this capital campaign funds for and how it's going to improve your nonprofit. And if anybody's ever dealt with home construction or remodeling, they never come in on time and on budget. So you can rest assured that this will be, unless you're building a shed, this will take, multiple years, probably fiscal years, to get this done. And the amount of effort and administrative stretch that needs to happen for tracking those funds, what to do with excess funds at the end of a capital campaign. All these things need to be thought out ahead of time, because what you don't want to do is get halfway through this thing with lots of donations and have it fail and have to go back to those donors to either get more money and tell them that you grossly underbid what was going on, or, it's sunk costs that you can never get back. So I think really taking the time to, pre-plan this stuff and take 6 months or a year to really understand what it's going to take to get a capital campaign, not just started, but completed, and through the construction of whatever you're campaigning for is vital. One thing I will say that's probably changed since the last time that we talked about capital campaigns is the use of federal and state dollars for, say, things like mental health or low-income housing. It used to be that there was no way in America that you could get those or it was very unlikely that you could get those type of funds to build anything. But as the pandemic kind of stressed, our houseless populations and increased those, and especially if you're in a part of the country that's dealing with large, price home increases and rent increases, you might be able to levy cities, counties, maybe even federal dollars to get something done. It's always been in the low income housing tax credit area. But often now you're looking at maybe even private businesses and nonprofits being brought in to build low income housing or address the houseless problem or homeless problem that's happening in especially like the West Coast states, that you might be able to get sign off on this from counties and states. So it's another place to look and build into your feasibility study. It might be an outlet for some of that fundraising if you're going into a capital campaign. But again, don't fool yourself. This isn't an easy get from even now, with the houseless crisis at an all-time high, especially like where we're from in the Pacific Northwest. It can be daunting and quite an uphill battle to get those funds. Just realize that they are now, there's a silver lining that there are now some available funds for that, because they're really putting money in to address those situations. So it's not hopeless, but again, I can't stress enough how much time, effort, and just manpower it takes to get one of these capital campaigns done.
Yeah, and I would just offer that I have seen in the past successful campaigns, or campaigns that they weren't necessarily sure were going to be successful, being broken up into multiple parts, right? Where you have capital campaign phase 1, 2, and 3, right? And then they can chunk these out and use the donor pool and the donor money to try to get phase 1 done. And if there's not enough buy-in or, feasibility to do phases 2 and 3, you can then still point to your successful campaign of phase 1 without seeming like, well, we took in all this money and we did nothing with it. So, there are different options out there. People who have way more experience with capital campaigns can be way more creative than I can around this. But like AJ said, know that you're going to be paying a chunk of change for that feasibility study. And I know there are some organizations out there that are like, we can do this. We don't need a feasibility study. Careful, because, if things go poorly later on, one of the things they may ask for, if donors come back and say, well, what did your feasibility study say? So just have awareness. This is this long, slow process. It taxes a lot of people. It's great publicity and can look really good for your organization. But, this is not an undertaking that you want to do. I mean, most people don't do capital campaigns more than once every 5 years because they are that intensive and take some time. So those are my 2 cents. And I think we're ready for our topic of the week.
So this question or topic came in, and it's regarding nonprofit. So this is a smaller nonprofit that's audited, follows accrual accounting, and files a full 990. And the question is that, I guess they have kind of grown in size, and they had an outsourced accounting service that was doing their essentially bookkeeping and monthly closes and everything. And they're in good standings in their audit. There was no findings, of course, in prior years. But their question essentially revolves around, they tracked about $30,000 to $40,000 in in-kind services, but had not tracked any kind of in-kind goods that were being afforded the organization. And so that what they're talking about is they have lots of skilled volunteer labor and donated goods. They're estimating about a value around $150,000 to $200,000 a year if they included all of that. And they're also noting that tracking at this level requires them a lot of training and kind of legwork by staff and program managers to be able to accumulate that type of data to be able to support the $150,000 to $200,000 a year. So just to lay this out, that means they're about $100,000 to $150,000 shy of where they should be tracking. That their unrecorded in-kind cost of that much they're seeing from the inside. And so the question is how detailed should your in-kind, tracking and financial reporting be? And would you track discounts provided specifically to nonprofits? They're talking things about like, you get your QuickBooks license from TechSoup and it's, a steep discount from $300 a year to $75 or whatever it is, that if you should consider that difference like a grant or a donation or an in-kind donation. And then they're talking about like Google AdSense, where the Google gives you X amount of money to SEO optimize your organization's website so that you show up on Google searches. And then what about like the free Microsoft licenses? Do you consider those in-kind donations? And then they also ask about an in-kind policy and what that should look like. So I think there's a lot of meat here, and I think there's maybe some assumptions or questions that they may be easy answers, low-hanging fruit in these questions. So Mark, I'll let you start off. In-kinds.
Yeah, and AJ, I know you have way more experience as an auditor than I have, so you're gonna give us some more of the legalities, but I'm gonna just kind of give us some of the broader picture, broad brush strokes. If you don't have the capacity to track your in-kind, don't take in-kind. This is a part of your fiscal requirement, and you can set in-kind policies, but you should have somebody dedicated to tracking that. Somebody on the development team, perhaps, or somebody on the finance team, or two people working in tandem on this. You have to get a real clear picture of what your in-kind is. But the question of should we just not do it because we don't have the manpower to do it, I think is a non-starter with regard to any topic, right? If it's a legal requirement that you have to put forth your in-kind, then you should be doing that. That being said, my experience has been that an in-kind policy is similar to a capitalization policy, right? You can have a threshold of a dollar amount below which you don't necessarily need to track all the minutia of hey, I got a free, I used my 10th punch on my Starbucks card and they gave me a free latte. No, you don't have to track that, right? So there is a specific definition of in-kind. There's a specific method and means for tracking that. And, there was some mention in here about volunteer hours, et cetera. Realize for labor, you're only going to have to track in-kind labor that is by a professional, skilled individual that you would otherwise have to pay for those services. If this is a volunteer coming in and doing some cleanup in your location or whatever that is, those volunteer hours, you're not converting those to cash and then putting those down as an in-kind. You probably would want to keep track of those hours for grant purposes, for other volunteer hour questions that would come up in various, it's always a good idea to keep track of those hours, but you're not converting those to money and putting them in your financials. So those are some of my initial thoughts. AJ, please tell me if I've said anything incorrectly, but I welcome you to elaborate.
I think you're absolutely right. I think a good in-kind policy makes it clear to everybody what is an in-kind donation, and really understanding and defining what that is, I think is vital. So nobody's left handing like, oh my gosh, I got a notepad from Gary because he was moving out of his office, and whatever next door. Do I record this as an in-kind? So it is an in-kind, but again, what makes it up? And what that materiality threshold is. If Gary gave you 200 boxes of notepads, then maybe, yes, you record that as an in-kind donation. But if Gary from next door that closed his business gives you 2 notepads, it's not worth recording. You're talking about $3 worth of paper that doesn't need to be recorded. So I think understanding like a dollar threshold, a materiality threshold to what's being recorded, and understanding what you consider in-kind donations to be is vital. And like Mark said, for volunteer hours, it has to be something that you would normally pay for. So if you have somebody come in and out of the goodness of their heart, they volunteered to serve meals to the homeless and or serve meals to underserved communities, and that's what you do as a program, that is just volunteer hours. You would want to track that for, like Mark said, for grant reporting, for your annual report. We have X amount of volunteer hours from X amount of volunteers. Looks good in your annual report or your board reports, when you're reporting the results of operations, but that does not count as in-kind donations. If you have like a CPA that pro bonos your 990, first of all, that's awesome. But second of all, that's a service that you would normally pay for. So you would need to report that at a fair market value. So what another CPA would charge you to fill out your 990 to submit it would be or have them, kind of tell you, if we paid for this, and that's usually how it works, what would be the normal cost of this if it wasn't done pro bono? Then that's usually a good market value for what that is. If you're receiving goods, this means, like, say you're, a good example is Goodwill, all the stuff you drop off on Goodwill step, they give you a card to fill out and you kind of assign a fair market value to it. But the way that they receive it, they usually, like, for instance, if you're handing in clothes, they usually do clothing by the pound. So they'll weigh it and they have a price per pound that's recorded. And I think it's also good to note how in-kind donations flow through your income statement, because it is an income statement or a statement of activity if we're being fancy. It comes in as a revenue and then an expense. It's a zero-sum game. So you're grossing up your revenue numbers and you're grossing up your expense numbers. It has no bearing on your bottom line. So realize that in an audit situation, if the auditor is not made aware of missing in-kinds, it doesn't really factor into a finding per se. It would usually mostly, and I can't speak for all auditors, but in my experience, it's been more of like a management letter comment, like, hey, you need to better track your in-kinds. We were able to verify certain amounts. We grossed up, revenue and expenses to match what we found, but you need to implement a policy. And, if you do this again, we'll have to, bring it up to the board or whatever that is. But for the most part, it doesn't have a material financial statement I can't even say it. It doesn't have a material effect on the financial statement. So it's usually not rose to the level of like a super nasty finding that would show up as like an adverse opinion on your financial statements. Could be wrong if it's super material and you got donated a building or something like that. But realize, like, 2 boxes of notepads from the guy that moved out of the suite next to you isn't going to show up there. But yeah, I think really clearly defining how you're going to cost things is vital. And then as far as tracking, I think, like Mark said, you don't want to put a lot of extra effort into doing this, but you need some kind of support. So that support would be how you valued what you were given in kind and showing that, in some kind of spreadsheet or something. If we're talking about professional hours, you need to track those and you need a pretty good basis on what somebody's spending there. So a lot of this can be estimates. I mean, if somebody just on average spends 10 hours a week working with your organization to do, say, like bookkeeping for free, yeah, it may be more than that. But if they on average are there 10 hours and maybe check in with them quarterly to see if that number has gone up or down, and then assigning a cost to that of like market value of what a bookkeeper would cost in your area, that would be a good step to put forward. If you're talking about thousands of volunteer hours, you probably want to track it anyway to make sure that you have an accurate professional service level of hours recorded. So there's numerous kind of software that you can use to do that, or Excel sheets, but you need some kind of basis on how you're arriving at your numbers, especially if you're audited.
All right, perfect. I think with that, we're going to wrap up another episode of Profitless on Purpose. We certainly appreciate you being here with us today. As always, you can reach out to us on the web at ProfitlessPod, or just feel free to send us some questions and comment right here in the YouTube channel. We really appreciate you being here. Said that already, but we really mean it. Anyway, on behalf of AJ and myself, thanks, and we'll see you next time.
Thanks, everybody.